Hi, welcome to our YouTube channel. In this video we are going to talk about gold versus Bitcoin. Which is the better investment for you? So before starting this video, make sure to hit that like button, subscribe to our YouTube channel to join our family. Should you invest in an emerging asset like Bitcoin or a traditional, safe haven, like gold? As inflationary pressures rise, investors worry the value of their money will diminish. Holding gold in your portfolio might be one way to invest to protect your purchasing power. But there is an alternative asset class that has taken off in popularity within recent years: cryptocurrency. As institutional and retail investors alike pile into Bitcoin, you might be debating whether this new digital asset has a place in your investment portfolio, or if you should stick with something traditional like gold. Here's what you need to know about both assets. Gold as a safe haven asset. Is Bitcoin the digital gold? Should you invest in gold or Bitcoin? Gold, the safe haven asset. Gold has been around for centuries. People value gold because it's a source of security that has been tested over time, while Bitcoin hasn't been around during a major financial crisis like the Great Recession. Gold is a well-regarded asset, widely used by investment professionals. Central banks, major governmental institutions, pension funds, and astute family offices will always have an allocation to gold, says Edward Carr, founder at US Gold Corp. Some investors like to think of gold as insurance for their money. If there is a concern about a nation's currency, or if there's an economic collapse, people usually flock to gold because it benefits in times of crisis. For gold, it has over 5,000 years of history on its side and isn't going anywhere, which means it is super safe, says John Carter, founder of Simpler Trading. While gold prices have experienced volatility similar to stocks in the short term, over time, the precious metal's value has remained stable. Since we're living during a time with a lot of market volatility, it can make sense to have a portion of your portfolio allocated toward gold. Gold prices can benefit from inflation, which makes it a great inflation hedge. When prices rise, the value of fiat currencies decreases and gold's value rises, because investors put their money into the precious metal to protect their purchasing power. Bitcoin, digital gold? Bitcoin is the world's largest cryptocurrency by market capitalization. Unlike the stock market, which is open for trading during the week from 9:30 a.m. to 4 p.m. Eastern Standard Time, the cryptocurrency markets allow users to trade Bitcoin and other digital assets 24 hours a day, 7 days a week. One of the key features of Bitcoin is that it has a fixed supply, which means there will only ever be a maximum of 21 million Bitcoins in circulation. Given the fixed volume of the asset, if there is continued demand for the cryptocurrency, the value of Bitcoin will theoretically increase, but there is still no guarantee for that. According to Edmund McCormick, founder and CEO at dChain. Similar to gold and other precious metals, Bitcoin derives much of its value from its limited supply and growing consumer demand. That said, the reality is that Bitcoin prices have experienced extreme volatility. Within the past month alone, Bitcoin's price has fallen from nearly $60,000 in the beginning of May to about $32,000 in early June. Furthermore, Bitcoin hasn't been widely adopted yet, which has investors wondering what degree digital currencies will be accepted in the future. As a result, there is speculation about where Bitcoin's price is going. Should you invest in gold or Bitcoin? As we move toward a cashless society and digital currencies become more prevalent, it's reasonable to consider whether a new asset class, like Bitcoin, is worth investing in. A lot of companies prefer to use Bitcoin, as opposed to gold in their portfolio. Bitcoin is truly decentralized, there is a finite supply, and you can use Bitcoin to transact with anyone from anywhere in the world, and unlike gold, it is very easy to store. But it's also important to consider the proven merits of gold. Because gold is more of a price-stable asset, you don't need to transact with it, unless you decide to change your investment strategy. Bitcoin, on the other hand, may require a different investment approach. Since Bitcoin is a volatile asset, Investors may want to have an entry and exit strategy if the price fluctuations become a risk. In the case where the value of Bitcoin moves to your advantage, investors will also need to decide when and if to take some profits. If you're wondering which asset to choose, gold or Bitcoin, Carter says it depends on your investment goals. The case for Bitcoin is speculative given that it doesn't have much utility yet. Most financial experts advise for safety and wealth preservation, gold. For speculation, Bitcoin. It could make sense to buy both, and for an aggressive allocation go 50% Bitcoin and 50% gold. Comment below and let us know, what do you think about our list? If this video was helpful, please like the video, and also subscribe to our YouTube channel. Thank you for watching.